Ella. So this is Jennings Imel from the U.S. Chamber of Commerce is going to talk to us and give us an update on the Federal CARES Act and talk about major provisions and programs for small businesses. And the U.S. Chamber is the world's largest business federation representing the interests of more than 3 million businesses of all sizes, sectors, and regions, as well as state and local chambers and industry associates. Jennings Imel is the Executive Director of the Western Region in the Congressional and Public Affairs Division at the U.S. Chamber of Commerce. Wow, that's a mouthful. The office is responsible for legislative and political grassroots activities in Arizona, California, Hawaii, Nevada, and Utah, and in support of Chamber's national public policy goals. So take it away, Jennings.
Thanks, Kathy. Appreciate it. Thanks for having me on today. Talk a little bit about some of the stuff that's in the CARES Act. I've noticed as I've gone through these webinars and been doing these webinars for the last couple of weeks that conversation has changed a little bit. I know that especially last week, there was still a lot of confusion as to what was in these programs and how small businesses were going to be able to take advantage of the PPP and the EIDL loans. Those are the two big loan programs for small businesses. I think a lot of that stuff, I think that businesses have developed an understanding of what's in these programs just because they've been going through this process themselves and they've been working with their lenders and they've already submitted applications to the SBA. So I've noticed that kind of the conversation has changed a little bit, and now it's kind of transitioned more to a general frustration with the inability to get funds from their local banks or even to be able to have a conversation with their banks and with their lenders. And then also just a lack of hearing back from the SBA, even though folks will say that they've submitted applications a week ago, they haven't seen anything, they haven't received an email. So that's kind of how the conversations have definitely kind of transitioned. So with that in mind, I don't think I'll focus as heavily maybe on some of the details of the programs, just because I think people are developing an understanding. But I'll talk about kind of just generally where we are, certainly the intent of the bill, because that's important to understand what Congress had in mind when they put this together, and then talk about kind of what Congress's next steps are, what our next steps are at the U.S. Chamber, things that we're going to be kind of working on over the next couple of weeks as well. So, that being said, I want everybody to understand, because there is a lot of frustration out there with the way that this has been rolled out and the inability to get money and to get help right away, that this was a huge undertaking. It's a $2.2 trillion bill. It's 10% of the nation's GDP. It's the largest economic stimulus relief package, whatever you want to call it, ever passed in the history of the United States. And it was put together in less than 2 weeks. It's 900 pages. There's a lot in there, a lot to digest. And so it's taking time to do that. And we've had to kind of wait and see what kind of the additional guidance and what the additional regulations look like from the SBA and Treasury. We got a lot of information last week, more information over the weekend. We're going to get even more information in the next couple of days and weeks on some of the programs that are in there. But I just want everybody to understand that this was a massive undertaking. And so that's why we're seeing a lot of the frustration that we're seeing, because it's been rolled out over such a short period of time. But also understand that the intent of Congress here, there are really kind of two underlying objectives that they sought when they put together this CARES Act package. And the first was to immediately inject liquidity into the system, because we have a liquidity crisis for small businesses. They need cash. They don't have the cash because they don't have money coming in. How do we get money out the door as soon as possible and make it as accessible as possible for all of these businesses that have been impacted by COVID-19 to get that money? So step number one, intent number one of Congress was to reestablish and reinsert liquidity. The second intent of Congress was to keep people on payroll and to keep employees tied to their employers. So that's why a lot of these provisions, especially when you look at the Paycheck Protection Program, the PPP program for small businesses, it's really tied to payroll, and it's the incentives there are for payroll and for employers to keep their employees on payroll. And there are a couple of reasons for that. First, of course, you have 150 million people that get their insurance in the United States through their employer, their health insurance. So you want to make sure that they continue to stay on payroll so they can continue to get their health benefits. Second thing, you look at the UI systems, the unemployment insurance systems across the country, state by state, they have been overwhelmed. I know that, the website in the state of Arizona, for example, crashed. A lot of states are having problems, processing the applications. And so we want to kind of keep unemployment numbers down as much as possible, although, I mean, we've seen the most recent tallies. We're at 17 million right around over the last 3 weeks. But that was the intent of Congress, was to kind of keep those numbers down and keep folks on payroll. And then the other reason is, quite frankly, when at some point we're going to get out of this in a couple of weeks or in a month, whenever that is, and if we have employees still on payroll, still tied to their employers, they can be brought back to work very quickly, and we can get business up and going very quickly instead of having to go through the whole process of rehiring them. So, but that's why you had this big focus on payroll. So those are the two major objectives that Congress set out, was to re-inject liquidity and maintain payroll. So that's pretty much what the CARES Act is aimed at doing. And I hopefully kind of sets the groundwork for everybody's understanding of how the bill is supposed to work. So with that being said, I'll transition here into my slides. Let's see, it should work now. I'll go into presentation mode if I can. I'll go to the beginning. I'll just talk about some of the major provisions in here, and then of course focus mostly on the two provisions for small business. So on the individual side, I'm sure everybody's aware, $1,200 checks coming in the mail for folks making up to $75,000 a year, $2,400 for joint filers, up to $150,000 a year. And those folks will also be eligible for a $500 per child check as well. Those checks are supposed to be coming by next week, so it'll be direct deposited next week from the IRS. So that'll be based off of the most recent information that IRS has, based on your most recent tax filing. And then if you're somebody that is used to getting your refund checks in the mail, those will probably be coming at the end of April. So that's on the individual side. For unemployment, we've seen a huge expansion of unemployment as well in this bill, particularly related to COVID-19. So if you've been laid off or furloughed due to COVID-19, or your business was deemed non-essential and was shut down, and now you're out of work, you can take advantage of these expanded unemployment benefits. They've expanded it from 26 weeks to 39 weeks. And they've added $600 per week on top of the regular state benefit as well. And that's retroactive to January 27th. So if you were laid off or furloughed in February and March, before the CARES Act went into effect, and you were laid off because of COVID-19, you could still retroactively access that $600 per week. And then that particular benefit expires on July 31st. Overall, though, the eligibility, that expanded 39 weeks of eligibility for unemployment, that runs through the end of the year. And then it's also important to note that your eligibility ends as soon as your employer offers to bring you back to work. So when they make that offer, and if you reject it because you're thinking that you're making $600 per week on top of the state benefit, and that's more than you'd be making if you were employed, well, your eligibility expires as soon as you reject your employer's offer. So important to note, because I know that there was a lot of confusion on that particular issue. And of course, unemployment insurance is handled through your state, so you'd have to apply through your state UI office. I should also mention too that sole proprietors and self-employed and independent contractors are also eligible for UI. So that was another expansion that was made in the CARES Act. I'll talk about some of the tax credits that are out there. The tax side of things hasn't been covered as much as the two loan programs. So I'll talk a little bit about that, and then focus most heavily on the two loan programs. On the tax side of things, there are two options that businesses can exercise, really regardless of their size, whether they're small, medium, or large. And the first one is on payroll taxes. They can defer payment of the employer's portion of payroll tax, the 6.2% Social Security tax, between now and the end of the year. And if they decide to do that, then 50% of the amount they owe would be due at the end of 2021, and the other 50% would be due at the end of 2022. However, it's important to keep in mind that if you are having your loan forgiven under the Paycheck Protection Program, you are not eligible to defer your payroll taxes. Some of the other tax changes Net operating losses now can be carried back 5 years against previous taxes paid. You can elect to increase your limit on interest deductibility from 30% to 50%. And then a big one for folks, particularly in retail and the restaurant industry now, they have access to 100% bonus depreciation, so they could deduct improvements that they've made in their commercial property over the last couple of years. They can make that deduction and take advantage of that immediately. They might have noticed after the tax law in 2017 that there was an error in the drafting of that law. And so businesses that made improvements to their property while thinking that they were able to deduct the expenses immediately and take advantage of that, that ultimately did not happen because of that drafting error. And so the CARES Act fixed that error. And so now they have full access to what they call bonus depreciation, 100% deductibility of those expenses immediately. So that was another fix, once again, kind of aimed at reinserting liquidity and making businesses liquid as soon as possible. The employer retention credit is another one that I think is a good option for folks to think about. This is for employers that have been fully or partially shut down due to COVID-19, or have seen a 50% drop in gross receipts in a quarter compared to the previous year quarter. And then their eligibility for this employee retention credit is also maintained until their gross receipts exceed 80% of what they were the year before. This is a refundable tax credit of 50% of the wages that includes employers' health plan expenses as well, for each employee up to $10,000 per employee. So it's a fancy way of saying that an employer can essentially get a $5,000 tax credit per employee to keep them on payroll. However, there are two different sets of rules depending on the size of the employer. So for an employer with more than 100 employees, they'll only be able to take advantage of the $5,000 tax credit for employees that are not providing a service. So that's for employees that they've kept on payroll but are not really working in the workplace. So for those folks, you know, they can apply the $5,000, but for the other 100 employees or so that are still in the workforce, they won't be able to do that. Employers with less than 100 employees, they can apply this $5,000 tax credit for all of their employees. There's no restrictions. Also important to note, just like with the payroll deferment, that if you get a PPP loan and you have forgiveness through the PPP, you're not going to be eligible to take advantage of the retention credit. So it's going to be a one or the other. And then you can work directly with Treasury and the IRS to secure advance payment of the credit as well, understanding that businesses can't wait to get that money to pay for their employees. Mid-sized, larger employers, this is a big part of the program. We still are looking for a little bit more information on how this is going to be rolled out. There are going to be, I think, 9 separate credit facilities that are going to be established to help businesses that have more than 500 employees. We're going to be specifically kind of eager to see what the program looks like for the mid-sized employers. So that's employers with 500 to 10,000 employees. I don't know, Kathy, can I admit people, or do you want to admit people since I'm the host now? Should I do that? Admit? Okay. I'll admit. All right. So we're still waiting to see a little bit more information on this program, but that's a big one. There's $500 billion in it. About $450 billion is set aside for those mid-sized, larger employers, as well as for states, counties. So we'll see more information on that probably in the next couple of days. But I think that the bulk of what people are going to be interested in, particularly here on this call, is the PPP and the EIDL program. So on the PPP, this is the $350 billion program for small businesses. So those are businesses with less than 500 employees. It's also open to nonprofits, 501c3s specifically. C4s, C6s are not eligible for this program. Most other nonprofits are not eligible. Folks that are self-employed, sole proprietors, independent contractors are also eligible for the PPP. Small businesses were able to apply directly to their lenders for this program last Friday, April 3rd, and then starting today, April 10th, the self-employed, sole proprietors, independent contractors can also go directly to their lenders and apply. The loan amount, the maximum loan amount that you'd be eligible for would be either 2.5 months of payroll or $10 million, whichever is less. And there are ways that you go about calculating your payroll the way, as it's put in the statute, would be to look back 1 year. So you'd go all the way to April 2019. You'd look at all of your payroll costs over the last 12 months, take those, divide it by 12, and that would get you your average payroll. Now, what goes into the calculation for average payroll are things you want to make sure that you include health insurance benefits, retirement benefits that you're providing, sick leave, PTO, commissions, tips, state and local taxes on employment. So that means your state tax for unemployment insurance would go in there, but not the federal tax for unemployment insurance. So all of those things can be calculated when putting together or doing your calculation for average payroll costs. And then you also want to make sure that you're not including compensation over $100,000 per employee. So there is a hard cap on a per employee basis of $100,000. So if you have employees that are making $150,000, for example, you'll have to deduct $50,000 when doing the calculation on your payroll costs. So once you get the average monthly payroll cost, you multiply by 2.5, and that gets you your maximum loan amount. And then the loans will be made, of course, by local national lenders, anybody that was SBA approved. And then SBA has worked to get pretty much every FDIC insured financial institution to be eligible to participate. And I'm sure that folks have already gone through this process. Let's see, free meeting will end in 10 minutes. Is that okay? That's okay. Okay. So that's so I'm sure that a lot of you have already kind of gone through this process, and I'll be eager to kind of hear more at the end of the presentation about how that's going. But minimal requirements, no collateral, no personal guarantee, outside credit is waived. So that's good. The loan can be converted into a grant, of course, when it's used on payroll, rent, interest on the mortgage, and utilities. And the calculation, so you'll want to, as an employer, do two different calculations. You have to do the first calculation based on your loan amount, and that's 2.5 months of payroll. And then the other calculation is you're going to look at what you're spending on payroll, rent, interest on mortgage, utilities for the first 8 weeks after the origination of the loan, because that will determine what you'll be able to have forgiven. And then the final guidance also stipulated that for the forgiven part of the loan, 75% must be used on payroll. The other 25% can be used on those other things. So just keep, make sure that you're doing those calculations. If you do have money left over from the loan after the 8 weeks, then those will be subject to terms of the loan, and the terms are 1% interest rate over 2 years, deferment of all payments for at least 6 months. There's no penalty for prepayment. So those are the outstanding terms. Loan forgiveness is reduced proportionally if you reduce the number of full-time equivalents or if you reduce wages by more than 25%. However, if you do those things, and if you've had to lay off folks or reduce wages between February 15th and April 26th, that's fine. So long as you bring them back by June 30th, you have to restore all of the employees and restore wages to at least 75% by June 30th. If you do those things, then you can still have your loan forgiven. The other program that's out there, and I should mention too, uschamber.com/SBloans, find out more information. I know that that Lisa and Kathy, you all at the Lake Havasu area chamber, you have this information. So, please feel free to take advantage of this stuff. This is really good stuff on the PPP program. And then make sure too that you go to treasury.gov/cares to get more information on the program, and to also get the PPP application itself. You'll need to fill that out and then take that to your lender. The EIDL program, this is also open to small businesses, less than 500 employees, nonprofits, all nonprofits, so C4s, C6s should be eligible for this, self-employed, sole proprietors, independent contractors. Now, it was originally intended to be up to $2 million of working capital for an up to 30-year term. That's not going to be the case. We've learned that the SBA has essentially run out of money for this program. They only had $7 billion. That was part of the phase 1 package that was passed by Congress a month ago. $7 billion they've essentially run out of. So now the maximum loan that's going to be available for businesses is anywhere between $25,000 and $35,000. So very disappointing to see. And hopefully Congress will address this issue when they, when they're talking about kind of inserting more funds for the PPP program. Hopefully they'll also do the same for the EIDL program. But wanted to let you all know about that new development. Payments would be deferred up to 1 year. And also the EIDL loan could be used for things that are beyond what the PPP can be used for. So not just payroll, rent, things like that, but it could also, the idle loan can be used for supply chain disruption, other costs, or, paying other obligations that you can't meet due to loss of revenue. Those things are included in the idle loan. So both of them can be used, and both of them can be used by the same employer. They just have to be used for different things. PPP has to be payroll, rent, utilities, things like that. And the idle loan has to be, if you have both, the idle loan would have to be on all of those other expenses. If you do have an idle loan and you're using it for payroll right now and for rent and utilities, you could still apply for the PPP, but essentially what you'd be doing is rolling the idle loan into a PPP. You'd be refinancing into a PPP. There's also, the CARES Act created this $10,000 emergency grant, this cash advance grant that you're supposed to receive within 3 days. And you can receive that even if you're rejected for the idle loan itself. A lot of confusion on this program. Most folks that have applied for it haven't heard anything back. And what we've heard is that the $10,000 will be available within 3 days after you receive an email confirmation from the SBA saying that your application was approved. Then within those 3 days, you'll be receiving the $10,000 or up to $10,000. So I hope that provides a little bit of clarity, because we've heard a lot of frustration from folks that haven't heard back on that. The idle program, you'd go directly through the SBA, sba.gov/disaster. You don't go to your lender on this. You go directly to the SBA. You fill out the application form on their website and submit it there. And then we have more information as well at uschamber.com. And we have an idle guide that you can look at as well. I'll end it there. I know that we're kind of tight on time. So those are the two programs. Happy to take any questions on those. Just know too, from the U.S. Chamber's perspective, we're going to be continuing to work with Congress to make sure that we beef up the PPP program, because it looks like that's probably going to run out of money at some point in the next week or two. I don't know when exactly, but there's been huge demand for it. Idle is now essentially out of money, so we're going to be advocating for that. There's going to be a lot of stuff that potentially gets talked about in a phase 4 package over the next couple of weeks. And then a big focus of ours going forward is going to be focused on how we reopen the economy, because the economic damage that's been done and continuing to be done, obviously is very severe. And we're going to be looking at ways that we can, in a healthy and responsible way, reopen sectors of the economy and get people back to work. So that's going to be a big focus of ours as well over the next couple of weeks. So happy to take any questions if there's time.
I just wanted to give a quick update that I do know that local businesses have received their funding as of this week.
They have?
Yes, they have.
Oh, great.
Those are real legit businesses that said as of last night they were getting their EFT funds.
Okay, this is the PPP program. They were getting it from their lenders?
Yep.
Fantastic. Okay.
Coming through. So that is a true thing, which is good.
Okay, good. That's good to hear. Thank you for that.
You're welcome.
Are there any other questions, Kathy, that you see? No. See if there's a chat.
I'm not seeing any. I have a tendency to talk to you when I'm muted, so there you go. Sure, go for it.
I'm trying to get in here without getting within 6 feet of Kathy. So Jennings, on behalf of our chamber, we really want to thank you for your time. I know you probably got back-to-back webinars helping other chambers across the West. So know that we appreciate you.
Yeah, thank you.
Stay home over there in California, okay?
Okay. We have to. We have no choice here. I mean, we're on total lockdown in California.
No, I know, but a lot of your citizens are still calling us on a daily basis asking, is the lake open?
Oh, really?
So, yeah, because they want out. But anyway, we appreciate you.
I have a quick
No, great. Thanks.
We got Nikki has a
stand 6 feet. Hi.
Hey.
Quick question. I have a lot of friends and hairdressers and things like that are asking about the unemployment. Do they have to do anything aside from when they file for unemployment to receive that 600? Is there something that they have to do?
No, not on their end. No. So
Okay.
the $600 was made available to all the states from the federal government. So yeah.
Okay, perfect. Thank you.
Yeah, thanks.
Thank you. It's been very informative. I appreciate the invite.
Thank you. And thanks for that bit of good news too, because we've heard from most of the people we've heard from, it's been frustration and I haven't been able to get any money yet. And so thanks. That's really the first time I've heard that.
Can you
So,
chat?
That
Put the chat on.
process is really smooth with their local bank, and it's been a done deal. So the money's in the bank, and they're planning on using it next week, and actually even taking care of their
I'm
employees.
in the back.
Awesome.
But then, I don't know where.
That's great.
I don't know how to.
You should have put
Hey.
yourself on.
I don't know.
So yeah, just let me know if anything else comes up. The chamber team, if you need anything from us at the U.S. Chamber, we're going to be very focused on moving forward, phase 4, and what happens to and how we're going to go about reopening the economy. So we'll continue to be a resource and try to help wherever we can. So let us know if there's anything else that you all need.
Thank you much.
Right? Thank you.
Thank you. Thanks, Jennings.
Thanks. Thanks, Kathy. Thanks, Lisa. Thanks, Nikki.
You're welcome.
Bye.
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 Bye, everybody. Thank you.
Bye.